Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro technicals, and crystal ball gazing. Today is Tuesday, November 5th, 2024. Today's episode, we're going to start by bringing up a article regarding the cost of mining Bitcoin. Yesterday, I said that I wouldn't touch Bitcoin if it was over $45,000. I've had mixed views, going all over the place on Bitcoin. Overall, my overall thesis on Bitcoin is to not buy it when it seems more expensive and to maybe get into it if it seems, overly cheap. Point is, yesterday I said that it costed something like $45,000 to mine a Bitcoin. That was pre-halving. Since the halving, since the Bitcoin has changed its algorithm, which it does every once periodically, what happens is it costs twice as much computing power and therefore electricity to mine one Bitcoin. And so the actual cost is over $100,000 now in the United States to mine Bitcoin, but it gets a little more complex than that. We have an article from nftevening.com, Bitcoin mining cost. There is a link to this article in the description, and I think it's worth checking out. Here is the article. Its title is Electricity Costs to Mine One Bitcoin at Home Around the World for 2024's Post-Halving. So the main point here, really, is that mining one Bitcoin in Ireland costs $321,000, where electricity is a bit more expensive. And in Iran, of all places, you can mine Bitcoin for $1,300. This is why while the price of Bitcoin is currently at $68,000. So if you're running a Bitcoin miner in Iran, you are making an enormous amount of free money right now, mining it and selling it. It's like an infinite money glitch as far as I can tell. So, and then it further makes me wonder if it's worth ever investing in Bitcoin mining in the United States at all. It seems so obvious to me, but we have some enormous Bitcoin miners in the United States. The biggest one, I believe, is called Core Scientific. I believe it's in Texas, and I can't see why it would be intelligent investing to be purchasing shares of a company that's mining Bitcoin, where clearly the production costs are going to be so much higher. It's I'm just blown away. The article features a map actually showing the cost of mining Bitcoin all over the world. The dark blue is no data. We don't have data for those countries. They're not developed enough, apparently, to be able to figure this out. But, there's actually numerous places that have much cheaper costs for mining Bitcoin. Nigeria, Libya, Angola, all under $10,000 to mine Bitcoin. Bhutan, Sudan, almost $4,000. Ethiopia, $2,000. While in the United States, it's $107,000. I've considered getting back into investing in Bitcoin miners, but the companies that I'm most familiar with are pretty much all in the U.S., I believe, with all of their operations, I believe, in the United States. And looking at this map makes me think that that would be a pretty dumb idea, to be just perfectly blunt about it. Now, in other countries, there are going to be risks with regulation and taxation, but remember, Bitcoin is something that anyone can do with their, you set up the right computer, and you connect it to the internet, and boom, you can mine Bitcoin through a VPN. I assume that you'd be able to be doing it very successfully under the radar for relatively nothing in some of these countries compared to what you can do in the United States. And so it makes me really question trying to invest in Bitcoin miners in the United States specifically, moving forward into the future. I mean, at least, if you're in the US, like maybe Canada, it's 84,000, or maybe Mexico, 64,000, currently below, the current price of Bitcoin. Seeing this map was very eye-opening for me, so that's why I wanted to share it. Next on the agenda, super microcomputer and microchip technology, both semiconductor companies, had their earnings come out just after the close today. If you've been watching the show, you know that I've been saying almost in every show how semiconductor companies, because of the enormous amount of speculation priced into these companies need to show extremely, like, blow me out of the water kinds of earnings in order for their valuations to even just go flat, never mind trying to go up. So, as very, very expected from my perspective, we have an after hours super microcomputer dropping by 10%, and microchip technology dropping by 3%. SMH is a semiconductor ETF. It's a collection of stocks that holds semiconductor companies. And if you've been following the show, you know that I have a pretty decent sized position actually shorting SMH with SOXS. Today's earnings on those two companies add to the bearish potential of this chart setup, with a head and shoulders top, double engulfing candle at the top, recent big engulfing candle after a rising wedge, breaking out of the wedge to the downside, all signs pointing to semiconductors going down here. I might have to eat a bite of a hat at least if this doesn't play out this way at this point. I mean, the one thing that may send it the other way is the election, I guess. I mean, some people, like I've said on the show, are trying to play the election and say, oh, well, this is what's going to happen if this happens in the election, and this is what's going to happen if this happens in the election. It's like, it's the kind of thing that I wouldn't want to touch with a 40-foot pole. I agree with Ira Epstein. He's a professional trader. He's like in his 80s. He's been doing this for something like 60 years. He's staying away from it as well. I mean, the truth at the end of the day, when it comes to sort of an event where anything can happen and there can be any reaction to what happens, like it's very hard to say how that'll all play out. But certain candidates supposedly support the Bitcoin better than others, which may have an effect on semiconductors. But the way that I see it, again, is the valuation is just, it's priced as if these companies are just going to continuously make enormously more amount of money going into the future. It didn't work out for the railroads. It didn't work out for, the internet in the .com bubble. Many trees have grown tall with the expectation of them to grow forever, and then they don't. I mean, even another one that came to mind the other day, car manufacturers. Imagine being on the forefront of that and making all of this money, and then today there are so many car manufacturers in such tight competition with each other that their PE ratios are all just like, compared to other industries, are dirt cheap, because the profits are hard to make when you have so many producers producing so much. And it's inevitable for semiconductors to eventually become not growth companies anymore, but value stocks. And not just value stocks, but eventually very cheap value stocks, in my estimation. I see the semiconductor industry as in an enormous bubble right now that may be a large contributor to the downfall of maybe even the entire stock market in the very near future. But remember, I'm just a guy with a crystal ball. Anything can really happen with the election, and the reaction to it. What I'm more concerned about at this point is what happens on Thursday with the FOMC decision. It's pretty much priced in at 100% guarantee. We're getting basically a 25 basis point cut. I'm thinking it's possible we could get a surprise here. Once the election's over, the Fed doesn't have to worry about involving itself with what may happen politically anymore, and they might open my whole thought process is that they'll feel free to sort of hide anything that they've been hiding behind closed doors as far as opinions go about where rates should be and where the economy is, where it might be going. I think they might even open the gates on Thursday, assuming that the election finishes tonight. Hopefully it does. I hate when these things drag out, but I digress. Also, initial jobless claims come out on Thursday. Sorry for the mistake yesterday. When I was talking about initial jobless claims, I was referring to the employment report being the 12,000 number, not initial jobless claims. Initial jobless claims hasn't seen an enormous spike as you might expect, happening, really when the recession is happening, it goes up and up and up. It's not happening yet. So it's something to keep an eye on a weekly basis. And then the other thing is we have Nissan earnings coming out on Thursday. This is a stock that, it's the only stock that I'm finding out there that seems to be dirt cheap. It seems like it fits Graham's ideas of a bargain deal. Its balance sheet to me says, as long as I'm reading it right, that if they were to liquidate right now, the shareholders would, I believe, get twice as much as the value of the stock is right now. And so it's for me, it's an absolute no-brainer. And I'm not sure there could be news to get the price to go any lower than it already is. It's at blood in the streets, cigarette butt, bankruptcy level in price, but the balance sheet's fine. So doesn't make any sense to me. So I have a good position in it, and I kind of expect it to rise on Thursday or after Thursday, depending on what time exactly the earnings come out. So speaking of Nissan, today actually, if you count this as a descending wedge, which is typically a very bullish looking formation, it looks to me like today we actually broke out to the upside while the earnings is coming out in just a few days. So not sure what's going on here because we haven't gotten to the earnings yet. I was kind of expecting to stay in this wedge actually until the earnings report, but maybe this could be the market sniffing this out a little early, or maybe some of my viewers are piling in here and that's what's making it go up. I don't know, but I'm keeping an eye on it. No changes on the daily reminders. If you want to hear me read through them, watch Monday's show. I read through them on Monday. They are important things to never forget on a daily basis, in my opinion. That's why I call them daily reminders, even though I only review them once a week. They all suggest that the market is overvalued and we're at the point of the business cycle where things it would make sense for the S&P 500 to wake up and start correcting a bit. And so the crystal ball reading still remains S&P 500 currently priced like a Ponzi scheme, bear market imminent, Fed won't cut fast enough to save the economy. We will take a look at the rest of the charts in just a moment, but quick thank you for watching, and if you like to support the channel, feel free to do so. Also in the description. The support is greatly appreciated. On to the charts, starting with the SPX, the S&P 500. We're still below the breakout of this ascending wedge pattern, suggesting that it's more likely for us to continue being bearish here. But with the election and the reaction to the election, who the heck knows what's going to happen? Who the heck knows what Mr. Market's going to do now? Again, it would make sense for it to go down in price, but no, I don't control Mr. Market. Mr. Market's going to do whatever he wants. Considering today's election day, I'm a little surprised to see the VIX cooling off here, going down 7%. However, pay attention. We're still above that magic 20 number. We're still pretty elevated in the VIX, saying that no, even though we're less nervous than we were apparently yesterday or the past 3 days, we're still plenty nervous. But I guess, I don't know, the market was like pricing in some kind of black swan event to happen like right before, when the polls opened up today or something. I'm not sure, but it's interesting to say the least. Next up, TLT, my favorite place to be. One way to look at this chart pattern is actually when you go down and then you have an a descending broadening wedge. You can look this up yourself. The typical movement to do is to break to the upside and actually go up about the same size as the bottom to the basically the top of this to the bottom of the bottom candle here, same distance to the upside. So right now with 80% probability, so that's very high. So it looks to me like TLT, at least for the moment, wants to go higher. We clearly broke above this, so I'm not sure if this is like a run, sort of quasi run to safety, people being nervous about the reaction to the election. I don't really know, but it's what I see in the charts. As you probably know, if you're watching this, I'm 55% basically in TLT, but with higher leverage. And that's 55% of my whole portfolio. So I believe overall treasury bonds are very undervalued, especially considering the difference between the value of stocks right now compared to U.S. Treasury bonds. There's a big mismatch, and all I'm looking for is things to get a little bit more normal, and that should send TLT higher and the S&P 500 lower, or one or the other. But that's how I see it. DXY, or the dollar index, making an interesting pattern today. Before today, I would have said that we were looking like we were in this like pretty controlled bull flag, but we broke down further today. I'm not sure how to interpret this. It looks like, who knows, maybe the dollar will roll over further to the downside here. It's been very interesting to see the S&P 500 and the dollar going up, and gold. It just, all these asset classes not moving relative to each other in normal ways. So the biggest thing that'll affect the dollar really, I think, is the FOMC meeting Thursday. So we got to watch out for that. I brought this chart up, I think yesterday, the MOVE index. We've been in this sort of pattern that just broke out to the upside. When the MOVE index like moves up, it says that the market is prepared for larger moves in the bond market. It's the volatility of bonds. And when this spikes, bonds usually follow it pretty soon after, either spiking or dropping. Looks like to me that they might be going up from everything that I can tell. Again, I try my best to not be biased and read the charts. Obviously, I benefit massively if bonds go up here. But what do I know? I'm just a guy with a crystal ball. I wanted to bring up today the 10-year break-even inflation rate. This is the best way of detecting what the market thinks inflation will be on average for the next 10 years. And right now it's saying it thinks it'll be 2.28. I'll bring up the chart today because it's been getting very interesting, right? We hit this bottom of 2.02% in September 2024. On that date, the market was pricing in, okay, we're going to average 2% inflation for the next 10 years. Like, think about that. Think about what it took for the market to even get there in the first place. But I digress. The main point of bringing it up today is that we're no longer in this very bullish looking pattern. If anything, this could be a topping pattern, since we have a higher high and a lower low at the very tail end here. I'm in the boat where too many people are believing too strongly in further stronger inflation moving forward. And with everybody being on that side of the boat, I'm on the other side of the boat with this. It reminds me of when everyone said inflation was transitory, and then it went up to like 9 or whatever it was, 6 or 9%, something like that. And now everyone thinks that inflation is just going to keep going, ripping higher and higher and higher. I'm going to take it. I'm going to take the viewpoint with a grain of salt here. I think at this point in the cycle, it makes sense again for inflation to actually cool off more than people think it will. Again, with monetary policy easing because of the fiscal dominant situation, it should have a lesser effect than it would if we had less fiscal dominance. It's the same as the hiking cycle had less of an effect to slow down inflation. When we ease monetary policy, it should have a similar muted effect. This is why my crystal ball rating includes that I believe the Fed won't cut fast enough to save the economy. I think we're headed into some deflation, actually. So we'll see if me and my crystal ball all right and this continues lower, or if I'm wrong, this will continue higher. Another chart I want to bring up today is the 10-year minus 2-year Treasury yield curve. This black line in the middle, when we're below it, is an inverted yield curve. This is when the Fed is trying to slow down the economy, and usually when we come out of it is when the recession usually starts, because the Fed finally strangled the economy enough for it to slow down enough, and then they have to, help it, try turn the ship the other way and help the economy move forward again. I just bring up this chart because we have been kind of forming this flag here, going sideways a little bit. And just like any chart, when you go sideways, the longer you go sideways, typically the bigger the breakout. So the question is, are we headed for further steepening between the 2-year, 10-year, or might we go back into an inverted state for a little bit? Not sure. Something to keep a close eye on. I mentioned yesterday Bitcoin coming out of this longer term sort of bull flag and then retesting. And it's amazing. Today's candle basically hitting this line exactly. So as it stands, Bitcoin from a charting perspective is looking bullish, at least for the moment. Again, I'm in the camp where I'm not going to be touching Bitcoin for a few reasons. One, it's near all-time highs, and it's I don't chase momentum. I'll buy something that seems cheap. That's how I'm going to do it. My other perspective on it is that if the candidate that is expected to wins, and that candidate is the one that's supporting Bitcoin, that news is already passed as far as I'm concerned. The rumor was in. You buy the rumor, you sell the news. You don't just sit on the rumor and then wait for the news and then buy the news. That's the opposite. And so if it does play out that way, I'm thinking there's a decent chance Bitcoin will sell off here. But for the moment, the chart looks bullish. Next up, silver and gold. This is a gold chart. This is a bear flag here. Suggesting that gold is looking to actually go down in price temporarily, at least for a little bit. That's what the pattern looks like. Very similarly in silver, although if you've been a long time watcher, I don't trust silver charts. If silver looks like it's setting up a pattern to go bearish, it's almost like you should just take the opposite side of that. Again, I'm not a day trader. I'm not trading these things. I just like to pay attention to them to see where they are or where they might go for reference and interest. Last chart of the day, K-Web. Again, this is a collection of Chinese internet stocks with its recent massive 40% run. I still believe that this has the kind of valuation of a balloon being held underwater and, would still be cheap, around $50 a share. By how I value companies. It's been just amazing how we've been trapped in this parallel channel here for a while. One way to look at this is that if you see this as a bear flag, which it sort of is, the thing about bear flags is that the longer they go sideways, the less likely they are to actually break to the downside, and they actually eventually flip to becoming more likely to break out to the upside. So any which way about it, I am heavily invested in this fund, and if it does break to the downside, I don't care. I still think there's a lot of value here, and like Benjamin Graham suggests, you got to take political risk with a huge grain of salt, since at the end of the day, it is companies that run the world, not politics. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Rob's Child.